Hi, my name is Shreyans, and this is a series on analysis of financial statements. But before we move on to the financial statements, first let's try to understand a business. And why is that? Because, well, not everybody understands accounting or finance, which can get complicated with so many terms. But I think everyone definitely understands business at its most basic, the most fundamental level. And if you can do that, if you can understand business, then understanding the accounting or financial part of it becomes way more easier. And we'll see how. So in this video, we are going to try and understand the business at its most foundational level and then try to relate it with the most foundational aspect of accounting and finance as well. So let's get started. Let's say that we have a friend here, and a friend says that I want to start a business. Now, what do you need to start a business? Of course, an idea and a plan, but as soon as you get into the execution, the first thing you need is money, right? You need money in order to invest into that business. Now, either you can use your own money, which is equity, or you can borrow money from someone else, which becomes debt. So, this cash, this initial money becomes the capital for the business. And what do you do with that capital? You invest that capital into purchasing resources or assets for the business, because those assets or those resources will be used to carry out the operations, the business activities, which will generate revenue. And as you carry out the business activities, you'll also incur some costs, right? And after incurring those costs, what's left from the revenue is the profit which you want to make from the business. Now, from this profit, you have a couple of options. The first thing is that you can take that profit from the business as the business owner or as the shareholder or a capital provider, or these profits can be used to be reinvested into the business as more capital, which can be used to buy more resources and hence increase the revenue in order to grow and expand the company. That is what you can also do when you reinvest those profits. So, this is the basic cycle or the basic process in which the business is carried out. Now, let's try to relate it with a bit of finance and accounting and also create some fundamental relationships. All right. So you might have heard this line in business studies or corporate finance or wherever that any business exists to create money for the business owners, which makes sense, right? You have invested money and time and energy into the business. So you obviously want to make money out of it, right? Amongst other purposes, obviously, right? In finance, we call this as return on capital. Capital is the money that you've invested, and returns are basically the profits that you make. So, simply put, we can understand this as money earned on money invested. Earning good returns on capital is the most fundamental purpose of business. Why? Because when it earns returns, that is when it can pay its capital providers, and that is when it can generate additional funds for growth and expansion, right, via additional capital and additional resources. But obviously, the capital doesn't get translated into profits automatically. It goes through a process that we just studied. And this process is something like this: capital to assets to revenue to profit, right? And from that profit, you can reinvest some bit of it. So a business tries to go through this process and tries to repeat it as many number of times as best as it can in order to grow and expand, right? So if you can see here, there are four steps, so to speak. And from these four steps, we can create three relationships. The first relationship is between capital and assets. So how is the business getting money to purchase those assets, to purchase those resources? Own money, which is equity, or borrowed money, which is debt, or whatever proportion of these two sources of capital. The second relationship is between assets and revenue. Assets are the resources which are used to generate sales, and how well is the business using its resources to generate sales or revenue. And the third relationship is between revenue and profit. So, how efficiently is the business carrying out its operations so that it can keep the costs in control or reduce them to ensure that most of that revenue or whatever percentage of revenue gets converted into what? Profits. There is also fourth relationship, which is how you utilize those profits into further capital and into shareholder payouts. But that is something that we'll study later. That is the repetition aspect, right? So the first relationship between capital and assets can be understood via analyzing the capital structure. Capital structure is the proportion of debt, which is borrowed money, and equity, which is own money, and that money is used to purchase assets. So that is understood via capital structure. The second relationship between assets and revenue is understood via asset utilization. Sometimes it's also called as capital utilization, right? But the meaning here is how well is the company using its resources or its assets in order to make the sales. And the final relationship between revenue and profit is understood via profit margins, right? So how much of that revenue or sales gets converted into profit. So most of these terms are quite self-explanatory. In fact, when we study ratios, the return on capital can actually be analyzed or divided into the several ratios from these three aspects of capital structure or asset utilization or profit margins. So this is all that I had to share at the most foundational, the most basic level. Understanding this is very important because through this, you can have a very definitive way to look at most of the businesses that you can find. So I hope you were able to understand this well, and I hope you were able to get an intuitive understanding of the relationship between business and accounting and finance. All right, so that is what I had to share in this video. I hope you found this helpful. If you did, please share it. If you have any questions or any doubts, then please let me know and I'd answer them ASAP. So thank you so much for watching. Please subscribe so that you know when I put the next video in this series, and I'll see you next time. Thank you.